Okay, well, welcome to today's webinar for the 5th of September. So thank you for everyone participating. So running it to the same format as what I usually do. So for those that are unfamiliar, I'll just go through some slides. It's about half an hour. I'll go through some slides just talking about the market. I've got a couple of key sectors that I want to highlight. I'll just talk about a couple of stocks that we've been buying recently and what I'm looking out for. But then I'll try to keep the second half to the Q&A. So a little bit like the videos I do in the mornings on Thursdays, where let me know what you would like me to look at on the charts, and we'll go through that all together on the chart. So the way to work is there's a question and answer box, a Q&A box. You can type in the questions there, and I'll go through that. Obviously, if there's any double ups, I'll skip those, but I'll try to include as many as possible. We're recording the session, and I'll put that up on the website pretty much by Monday, Tuesday at the latest. If there's any issues, just with audio, or if there's something that doesn't seem to be going right, just leave me a message in the Q&A box and I'll keep an eye on that one. Any advice here, of course, is general only. Just quickly, for those that are not familiar with us, joining for the first time. So Fairmont Equities, we're a small boutique advisory firm. We combine both fundamental and technical analysis, based in Sydney. Our main business is in portfolio management, but we produce a lot of research and obviously free content like what you're viewing at the moment. And I founded the company 11 years ago now. And for about the last 13 years, I've been, we've been doing quite a bit with the media, and we still get to enjoy doing that. All right, let's get stuck into it. So, the recent sell down, I guess yesterday in the markets, had to do with a fairly soft US ISM PMI number. This is a chart that we've put together previously, and I've just updated it. Essentially what it is if we look at the red curve at the bottom, that's the PMI in the US. Obviously it oscillates up and down. It has been spending a few sessions under 50, which means contractionary territory, but it is improving. What we've done is we've had a look at different phases of the PMI, if it's under 50 and rising, if it's higher than 50 and still going up, if it's falling from a number higher than 50, et cetera, and we've looked at the performance of the S&P 500 and even the ASX 200. And I guess the key takeaway here is we're in phase one. So the ISM PMI, sure, it's under 50, but what we've got is a situation where it is rising, and it only happens about 10-11% of the time, but that's where you get the biggest annualized returns on the market. So there's obviously a bit of concern out there, but we are at that sort of bottoming phase, and this is where you get the best returns out of the market. So looking at the S&P ASX 200, obviously over the past year, we've been talking about the upside break, 7,600 running to 8,000. Yeah, look, we've done that. That's nice, but as you could see on the far right-hand side, still very choppy on the way through. So, look, the day-by-day blows are quite interesting at the moment, but generally it's got an uptrend to it. So, I'm quite happy with the direction of the S&P ASX 200. We'll look at a couple of major sectors. Obviously, the financials is doing extremely well. It is one that earlier in the year, we're looking at, the banks breaking higher, and then again in, I think, March, April, we're expecting another break higher. Wouldn't have expected, to be honest, the financials to be up where they are, especially around March this year, when we thought that the material stocks were going to join the party and would get this sort of more broader contribution to the ASX 200 going up, but obviously materials rallied for a few months and then just fell and broke under support, and it's actually been the financials doing the heavy lifting. So I don't see any warning signs yet. I mean, obviously it'll get to a point where it's going to end, but at the moment it's still looking fine. So this is looking at the materials sector going back the last few years. Here's that sort of bounce that we got in March, but obviously it rolled over. So you've got obviously quite an extended move lower, as we could see on the right-hand side. But again, you've got a situation where, this is what materials do. They're quite, you get these big moves down. We saw it in 2021, 2022, but then it does bounce back just as hard. So we're not seeing signs of the bounce back yet, but these are the sorts of moves that you'd be looking at, some sort of recovery at some point. And it's worth mentioning because obviously this year we've got, the market's been going higher. We've got the banks going higher. If you've got tech that's going higher, our property stocks are heading higher. Obviously, some industrials are heading higher. So in a normal portfolio where there is at least a couple of materials in there, they have been dragging the chain. So I just thought I'd quickly go through a couple of extra slides on the materials sector just to help explain that for the majority of people that would have some sort of exposure. So obviously quite volatile in the materials. This is something we've put together looking at iron ore and copper. So you get these, if you actually graph the movements in iron ore and copper, so the moves on the way up and the moves on the way down, the yellow bar at the right-hand side is basically demonstrating the current move lower in iron ore and copper. So it's just a small move down compared to the big turnaround that we've seen since sort of around 2022. Doesn't feel nice at the moment with those particular stocks, but we are coming off those lower levels. So I think it's quite normal what we're seeing at the moment. There's concern that if we're heading into a recession, this will be a negative for commodities. But actually, if you have a look at the way commodities, let's make the assumption that there's a recession happening or about to happen. This is the typical way it plays out. So the commodities sell off before the recession, but then by the time you do get into a recession, they're starting to recover, if anything, moving sideways at worst, and then they rally through it. If you go back and have a look at the Great Depression, commodities actually did really well. That's where you want it to be. So look, even if you think there's a recession coming and maybe we're going to just skim the surface of a possible recession here, given the data that we're seeing, the commodities could actually do quite well. The other interesting thing is the way hedge funds have turned bearish on commodities. So they're the most negatively positioned in commodities since the start of 2016. Now, if you go back and have a look at what happened in 2016, if you don't remember, commodities had fallen quite a bit for a few years, actually, into the start of 2016. At that point, there were concerns about recession. It was the year that Trump got elected. We saw the Chinese economy doing poorly, and they had to turn up with a lot of stimulus. OPEC were freezing their output. Eerily similar to what we're seeing at the moment. There's quite a few parallels. But at the start of 2016 was the beginning of a massive rally in commodities. Mineral resources tripled, BHP doubled by the end of the year. So again, we're not seeing this happening just yet, but the ingredients are in place for some pretty good moves in commodities. So if you've got a couple of commodity stocks in the portfolio and you're a little bit concerned about what's happening out there, I think we'll have another one of these webinars in a few months' time, or even the one in 6 months' time, and it'd be a different story. Commodities valuations. I mean, if we have a look at how the commodity stocks are valued compared to just looking at US stocks compared to the Dow Jones, they're the cheapest they've been. We're looking at the same levels as the 60s, and for those that were around and trading mining stocks in the 70s when it all ended, in terms of this depressed sort of commodity state, you've probably got some stories to tell about what some of those stocks did. So still very cheap. We're just waiting for this to eventually play out and get a decent valuation. Moving on, uranium. I've sort of started talking about this one again recently. So, uranium stocks at the start of the year did fantastically well, but then since May they have retraced all of those gains. But this chart's very interesting because since the start of January 2020, we could see the blue line, which is the spot price, and the red line is the long-term contracting prices. So the spot price this year's got everyone's attention. It's shot up massively, and then it's come all the way back down. All the while, the long-term prices have been heading higher. So they get published on a monthly basis. So we've now had the 20th month in a row of rising long-term uranium prices. So there is a disconnect out there between what the real long-term price of uranium is doing and the equities. So again, that's really keep an eye on that sector. That could be very close to a very interesting turnaround, and you'll get another decent rally out of it. Gold, I'm still happy on gold. Breakout earlier this year, consolidation a few months ago, and then it's still continuing to head higher. Obviously, potentially the move back into money printing by the US, lower interest rates, a lower US dollar, central bank buying, and gold stocks are still way undervalued compared to where gold has moved to. So I'm still quite bullish on that sector. So just quickly on some recent buys that we've had in the dynamic investor and stocks that I've been buying for my clients that I think everyone should continue to look at. Macquarie Group, continue to buy the dips. Still really like how that one's trading and where that one could go. Pro Medicus, it's one we've been buying on a few occasions throughout the year. Still looks very bullish. This is a clip from our report only a couple of weeks ago. A recent buy is Catapult. That's another tech stock. So the chart there, I think this was from a couple of weeks ago in our report, bouncing nicely off the 50-day moving average, outperforming most other stocks on the market. That's the sort of one that you want to look at. And in the gold space, Resolute Mining, I think looks really interesting as well. So that's another one that I've picked up for clients. Beyond that, I'm having a look at Aristocrat for any of my clients that don't hold it. I'm looking to get back into that one. For those clients. I actually had a write-up on it just on our website this morning. So have a look. I think that looks like a good opportunity as well. So before I move on to the Q&A, just a quick reminder, if you do have a portfolio greater than 500 and you are looking to get some extra help, give me a call. Or if you refer a friend to the service, then you can get the research, the Dynamic Investor, for free for as long as your friend stays a client with us. So yeah, just give us a call or drop me an email. Okay, so we'll move on to the Q&A. All right, so hopefully everyone could see that. And just drop your questions into the Q&A. Again, if there's any issues with the screen sharing, just let me know. So first cab off the rank, Paladin. Yeah, so look, the daily chart, it still looks ugly. I mean, you've got bullish divergence here, but it's really about what's going to happen over the next sort of couple of weeks with this uranium symposium. But as I've been highlighting over the past, I guess, year and a bit since I've been covering Paladin, I think it's all about the monthly. So if you're looking at uranium as a long-term thing, obviously early this year it was an exciting trade, but again, just want to highlight the base here, the breakout above 10. It's come back, it's slightly under that $10 mark, but if we finish September with a close above 10, that's a successful retest, and you'd be looking for a move higher. So in the short term, there's no clear buy signal, but it's one that you really need to be keeping an eye on. Let's have a look. The next one I have is red. So we've got daily chart, a bit of a, obviously it's pulling back, potential support level here. I'm just moving to the weekly. Usually it's better to start off looking at the weekly. Yeah, again, we've got an area of possible support. It's sort of bounced off the lows, but but again, maybe one to keep an eye on. No clear buy signal, in my opinion, just yet. Neuron. So this is one I looked at in one of my videos earlier. That's why that line is still there. It looked like must have been breaking a downtrend, but failed and is obviously continuing to slide. So, a situation like this, again, it looks, we're not even necessarily getting any bullish divergence on the RSI. So at the moment, it still looks like the risk is to the downside on that one. Okay, IAG. So obviously still got a trend. We looked at this one at one point where it was breaking through some major levels, but yeah, looks still trending pretty well. That's the weekly. Maybe coming up to a resistance level near $8, but it looks like a trend that you'd stick with. Okay, on Adelphus. Start off with the weekly. So, by eye, it looks like it's held on to this low. So we've still got the higher lows. Bit of a reversal here. Nice bounce, that is. And then obviously it's pulled back. So yeah, I mean, obviously a lot of the market's showing, a couple of days like this, but this occurred today. So it's dropped even today when the market had sort of stabilized to an extent. So a bit neutral. Might be heading back here. Interesting to see what it does around 1150. Next one's IPG. So it's a weekly chart. I mean, it's rounding out here. I think maybe what you could potentially end up seeing is a bit of a cup and handle. So what I mean by that is it rounds out here, and then maybe, as it gets to this old high, it consolidates sideways for a bit under it, and then it breaks higher, and that would be the buy. At the moment, don't know what it wants to do. It's kind of got up to that old high and come back. But now what? Is it going to pull back or not? And we could see on the daily chart, obviously, a bit of price rejection on the those intraday candles. Whitehaven. So I think this one went ex-div yesterday, didn't it? So that probably accounts for that gap, but yeah, not trading well. I'll just move to the weekly. So yeah, not looking too pretty. I mean, potentially you could say this is like a bear flag. Where are we going to draw our lines? I mean, even something like that, potentially you've got this sort of move down, bear flag, bit of a whoops, broke out, but gets back in, and now it's breaking down again. So yeah, not looking positive at the moment. ADH. All right, so obviously downtrend, starting to try to get a bit of, back into a bit of an uptrend here. Bit of a sharp move down there last week. Move to the daily chart. Okay, it's dropped. Again, I don't know what happened on that day. Maybe there was a result, but it's bounced off the lows. I think when you see a move like this, you tend to see it track sideways. So it looks like there's a clear line here. It might just sort of hang in underneath this line and then get ready to break higher. So I guess, a hold, and I'd be looking for the upside break if I was looking for a buy. Monash IVF. So we'll start with the weekly. Yeah, we could see the change of personality, can't we? So, I mean, this whole period of time, such a great trending stock, you couldn't fault it. Almost, perfect line there. Now it's broken. Looks like it's fallen. We'll retest here and then fallen sharply. So just based on this weekly chart, I'd say there's further downside risk. BHP, obviously very similar looking to that materials chart that we're looking at earlier, where you've got, the movement down here. So here's that period in March where, I mistakenly thought they were sort of bottoming out, but clearly we've got, there's been some further weakness here. Around that 42 is a major level. So I'm just flicked back to the weekly. So I think it just needs to, it might sort of base here for a bit, and preferably you want to see it break above 42 for the next buy. Downside risk, again, just moving to the daily. We've just undercut this August low, so it could drift a little lower. But we'll just have to see. BWP. Yeah, obviously sort of looks like over the past past year it's been turning around, drifting higher here. I'm just moving to the daily. Yeah, quite volatile. It's a bit hard to get a read on that. So if I move back to the weekly, all I could really say is, it looks like we've got higher lows, so you've got a slow uptrend to it. Where are we up to? So ResMed. This has been a good trading stock for us. Obviously, we've spoken about this one before. The big pullback and the move back higher was a good move. We exited, I think, on this little peak here. But after falling away, it's ripped higher again. Obviously, this area is going to provide some resistance. So, just be wary of that. If I just move to the daily chart, we could see it's still edging higher quite nicely. So if you're in it, you'd stick with it, but just be mindful that we're getting close to an area here around $36. You might start to see some selling kick in. Zero is the next one. This is daily chart. Well, I've still got it up. Looks fine. We've had that was the August sell-off there, bounced up to a new high and then is trading sideways, holding in pretty well. Not too dissimilar to the way PME is trading. So to me, it's a hold, and I'd just be looking for an upside break for a buy. Megaport, let's get rid of that old line. Go to the weekly chart. Doesn't look pretty. Yeah, that's just where it is at the moment. I mean, it's starting, potentially getting a bit oversold, but as we've seen even back in 2022, it is the type of stock that could really get oversold on the weekly. So it's nothing unusual there. bit of bullish divergence. You might get a bit of a bounce along the way. But yeah, still has that. It's still too early to be entering that one. FMG, we could see some previous support levels there that I've got drawn up that were broken, and that's triggered stop losses. So yeah, still on the way down. Yeah, a bit of bullish divergence on the daily chart. The weekly chart is showing it quite oversold, same as 2021. So that was the last time we saw quite a hefty move down in Fortescue. It needed a few weeks to stabilize. And then you had it rally, within a few months, it rallied, well, I don't think even a few months, it rallied 50%. So that's the possibility for a stock like this, but there's no buy signal yet. But I think if you're holding it at 16, yeah, you'd be waiting for that sort of bounce. I think, most of this move has been done. We're just looking for the final phase now. Wesfarmers, so weekly chart, sort of consolidation here, upside break, but now that's potentially under threat. So this weekly candle's a bearish engulfing candle. So what I mean by that is it opened the week higher than this one. And by the end of the week, it was lower than this candle. So this candle here completely covers, it engulfs this one. And that's when you see that at the, after something's been trending for a while, that's a bearish sign. And then we can see for this week, it's gapped lower. It's tried to rally close to where it, finished the prior week, but has continued to fall. Obviously, there's an ex-div in there as well. But, on this, you'd say that you wouldn't be looking to buy it just yet. I think you'd get cheaper levels. GQG. So it looks like they're sort of stepping down as well. I'll just move to the daily chart. So there's steady uptrend, but now we've got this sort of change of personality where it's been sold off a bit. It's tried to rally and again sold off. So I'd say this one should continue sliding. It's already 5:30, but I'll go for another 5 minutes because there was a little bit of I had to stuff around for a moment there with the slides. So we'll keep going on for another 5 minutes. Sandfire. So this is the weekly chart. Again, sort of nice rally here. I think that's one we looked at earlier in the year. We had that, obviously a major level there. Upside break. But again, all quite choppy. It looks like it's trying to round out here, but the weekly moves are quite large. So we need to see that settle down, maybe similar to what we had here, where we had quite volatile weekly moves, and then it kind of settled down. It was ready to get going again. So again, another one to keep an eye on. UNI, I don't know what this one is. So that's just moved over to the daily chart. Generally been heading higher. Obviously, quite a bit of price rejection here, and then the price action since then has stayed in the lower half of that candle. So not the best sign. So just a bit of an early warning sign that we may well see that one head lower. Telex Pharmaceuticals. So just looking at the weekly, still trending. This potentially just looks like a bull flag. Not looking too negative yet. So what I mean by bull flag is you've got this, it's almost more of a flat consolidation that's holding onto that little low. So you'd be, again, looking for it to bounce here. And if you can get out of that flag, that's the next buy signal. The next one was Treasury Wines. Start with the weekly. Yeah, you could see how difficult this one is, just how volatile it is without making any headway. Maybe I'm getting ahead of myself, but to me, that almost looks like a head and shoulders. You've got the shoulder, head, shoulder, but it would have to come back to this line and then break lower. In other words, if I'm saying that's a head and shoulders, that would be a negative, but it's a bit early for that. At the moment, you've got a bounce here off that January low. What's it doing here? Is this a sideways consolidation? That's the daily chart. Yeah, it looks a bit too early to know what that one's going to do. Beach Energy. So this one's got it's had some clear levels, but it's been breaking down recently. So I remember this one having some levels here where it obviously bounced off this sort of $1.50 range, and $1.90 was resistance, but again, falling away quite heavily, oversold, but no signs yet of a bounce. Like some of the others, bullish I'd have to check the numbers exactly. Maybe we've got a bit of bullish divergence here, but I think you'll get some bounces along the way, but there's nothing indicating a proper low just yet. JB Hi-Fi. So you've got basically what looks like a stock in an uptrend. So, so far with what it's been doing, yeah, looks fine. No warning signs yet. Obviously, it's been bouncing around overbought, but it was also looking overbought in June. But it's managed to continue on. So yeah, that's fine. Ampol, I've got a weekly, a few lines here from previous things we were doing, but yeah, clearly it's falling quite rapidly now. Again, starting to get oversold, but is that going to give us a bounce that's short-term bounce or something longer? And this is the daily chart. We can really see the volume coming out now. So again, just not one that you need to be rushing into. All right, I'll do one more. We have Select Harvest. So start with a weekly chart. So we could see this one's longer term been quite difficult, but what's just sort of grabbed my attention is that seems to be a very obvious level here at 450. So that's the level to watch. I wouldn't be necessarily touching it yet. I'll just move to a daily. Yeah, I mean, shorter term, is that a little breakout? So you've got a bit of a rally here. Is this a bull flag and a break, meaning that's a buy? But obviously 450 is where it's going to see a bit of selling. So you're not going to get very far. So ideally what you do is you'd wait for that 450 level. So because that's been a problematic level for so long, we could see for over a year now, that's where all the sellers have been. So if it can get through that, you'd end up with a decent move. I mean, it'd go to 550 really quickly. I mean, that's not a prediction. It might not even make it through 450. It might just collapse once it gets anywhere near 450. But at least you've got a very clear level to keep an eye on. Okay, well that's all for today. For this webinar, as I said, I'll upload it. Hopefully, have it available by Monday, Tuesday. But if you need anything else, you've got the details on my website. I'm very approachable. Just let me know. Otherwise, have a good night, everybody.